I guess I'll like talk like people are here, but today's the first day that I have all my live accounts. A lot of the times you've seen me trade or seen my past videos, this usually says combine or something, but now it's first day of Express. I have a I guess it's like a new technical risk to reward because I still have to trade like I am on my 50K account, which has a max drawdown of 2,000, or I'll lose my Express. But my other 150K accounts, they have $4,500 drawdowns and stuff like that. So this MML is your max loss limit. If I go below this, I'm cooked on the 150s, and if I go below 2,000, I'm cooked. So I'm gonna try and stick to the 8-day trading plan type thing where I have to take 8 straight full losses to lose it all. But yeah, I mean, I'm keeping relatively the same risk across all 3 accounts, but my reward is gonna be a little larger because usually on the 50K, I believe it was max 300 for 600. Now we're doing max drawdown of 300 for 1,000. So across 3 accounts, that's risking 900 for 3,000. So I'm gonna try and do that every day until the end of October, or the end of September. I'll have we have today, tomorrow, 5. I mean, if we can even get all the accounts to get 4 or 5,000 in them by the end of the month, that'll be great. So I'm gonna switch this all to one screen. So I guess I can do my top-down analysis. I mean, looking at the daily candle, we came up. We didn't sweep this high, which usually isn't good because you kind of want this candle to come up, sweep the previous day high. All these candles are days. So today we're in at the bottom. It'll show you like what day it is. So today is the 24th. 23rd candle, 22nd candle, the 19th candle, because this was probably Friday into a Monday. So there's going to be a gap in dates because you only get, realistically, unless you're lucky, you only get around 19 to 21 trading days in a month because markets are closed. But so we finally had a down close candle since this one, and we've pushed up. We're on a super aggressive buy model where we're just pushing higher, been pushing higher. We really haven't had a down close candle to close below an up close candle to signal a reversal for lower prices. But right now we're in a premium on every day. So realistically, this is our dealing range, and this gap in price is going to be where I initially would wanted to have taken profits, which I mean I might still do it. I'm not really sure, but yesterday was a down close candle, so I'm looking for shorts, which is down close. When you have a series of up close candles, this is get rid of yesterday's price drawings. This is my initial draw. This is the daily fair value gap where I would like for price to come down, tap in reverse. This is my exit if I was looking for shorts because we are in a all-time buy. So this is a fair value gap, which I'll describe what a fair value gap is. It's usually a series of 3 candles. If we're in a bullish market, the high of the first candle and the low of the third candle, if they don't overlap and they leave just this big space, this is a fair value gap. I like to trade if there's a series of gaps, which there is, because the high of this candle, of the first candle, and the low of the third candle don't overlap. This is technically a fair value gap. So delete all these drawings. So this is a rectangle tool. So you'll start the gap here, bring it up here, and drag it across. If you have a high time frame mind you, all these candles are 4 hours now because I broke up the daily into semi larger candles. If this gap gets filled and it creates a fair value gap, which it does, which is the low of this candle, because this third candle doesn't overlap the first candle, the low here, you know, we're trading into this gap. A lot of the times I would like for this, for at least the midpoint of a fair value gap to get tapped into. But you know, it could just be respecting the first gap, since you know this gap up here is kind of minuscule. Doesn't matter, you're just trying to find your edge. So ideally I'm looking for shorts. So I want the market to come up, fill the gap, come in, kind of like reach into the 50% of this gap, which it did, because the 50% of this gap is here. You know, it at least reached into it, so it's, you know, it's making me feel like we're good to keep shorting. You look at the hour. On the hourly, you have a change in the state. We don't necessarily have a fair value gap to trade into to look for shorts yet, but that's your change in the state. Change in the states are when you have a bunch of up close candles or down close candles and it overlaps the candle. So we have, no, you have a down and up, 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 and then a down, down, and then you get a change in the state here. Usually you'll like to see further price action go higher. So outside of that, since you want to frame your trade, right? So we're looking for, you know, down movement. So this is the earliest sign that we're going to be looking for downwards price action. So this change in the state makes it's good that we got this change. Another thing too is when you are looking to go short, you kind of want to see the first up close candle and this you know, the last up close candle, since we are looking for shorts. This one doesn't necessarily count because it's this sorry, this candle makes more sense to use than this candle because it's after a down close. So when this bottom wick was taken and it came down, you kind of want to get a trade into at least the 50 of this candle to you'd up your risk to reward essentially, and you would keep your stop up here. You know, scary enough, it went down, it came down because the next candle opens here, and I think it went up. It's all scary. At the end of the day, like I was in a move earlier, but I was afraid because I was up here when I got in versus being down here, which, I mean, there really isn't much of a difference. It's like 15 points. You know, if you're trading one micro, it's $60, which not in my case. My case is 6 times that, so it's a $360 difference, which is way more than what I'm allowing myself to risk day for day. So, you know, changing the state 1 hour, 15-minute. We got to change in the state to the downside. Draw this out because this is it's real blocky and it's kind of hard to understand. So markets. Okay, wait. All right, this is utter. So this is your low. Then it comes up, makes a high, comes down, makes the high, right? And it's all pretty much chop in here. So it comes down, comes up, comes down. I think it makes like a relative equal low, which is usually where it's 2 candles that come down and they don't sweep each other. It's just like exact. So this is usually a liquidity pool where, you know, the market's going to want to come down, take it out in reverse. And then the market came back up and then it changed here. Right. Oh, click on the wrong button. Right there. That's your change in the state on the 15-minute. And then you would, after this candle close, you'd want to find something to enter in on, which, I mean, I did because I'm currently in a short with context. But the only thing that is kind of weird though is realistically, make this make sense, because changing the states only use body candles, they don't necessarily use wicks. So you have a candle come up, make a low, came up, change in the state. You honestly could have watched. I think I found the move up here. Just want to draw this out because I'm not doing a good job of this. Sorry. So you click this, drag it. This is your earliest indication that we're going to be looking for bearish price action. When this candle came down and closed over this gap, it made me feel really weird because I was already in the short because I got in the short here, but the market pursued to keep going up and keep going up. But market on a different pair, we call it ES, which is the S&P 500. It had already taken this high, so putting in a bearish SMT because this is NQ, so NQ came down, came up, and it stopped right there, and we started to push lower. I felt really weird because this was not taken, and this is a pool of liquidity. There's a lot of people here that are in shorts that could get stopped out. But ES had made this high. ES made the high, came down, but it took it and then dumped, which makes me feel better that NQ didn't take it because with the correlating asset, it's kind of what you want to see. So we got the change in the state here. I'm gonna delete this because I don't really necessarily need this drawing. I don't need this because this was the before trade. And we go into, down close candles. No, not down close, smaller candles. So with the displacement of going lower, I like to get an average of price. So when the market came down and was making these gaps, it came up, tapped into the 50, and my stop was up here. I like using the swing highs of the market to frame my stops and my overall risk to reward. I just feel better up here. But as the market was going down, came up, and we got another change in the state on the 5-minute, which is making me feel good about getting lower prices. I averaged down. Which honestly, it's not how I trade. I like to average up. Like I like to. Funny enough, I like to have the market go against me, so I can risk more, so I can get out of my trades earlier. If that makes sense with context and everything. But now that we have change in the state here, let's say you were late, you could have drawn another fair value gap, rectangle box with the CE, which is the center of this box, and I would have, if it came up and tagged me in, I would have entered for another short. But the name of the game is you kind of want to get in at such a good retracement level where the market comes down, when you make a change in the state and the market starts to come back up, this is retracement. This is where you kind of want to get a better price. The buy low, sell high. Like right now we're in a sell model, so we want to be selling from up here. Let me draw this out because I'm here. In this box is discount, and this box up here is premium. Dividing the rectangle in two. Anywhere in this box relative to structure is where you want to be entering. Obviously, I entered a little bit lower because I took the 50 of this move, which doesn't line up with the overall move. Wait, this is bothering me because it's overlapping. See, this was my entry. This is your ideal entry, which is ideally where you really wanna enter. So I didn't get the best price fill, but obviously, with everything going on, we're sticking to the model. I know it's weird because 9 times out of 10, you see that we came down and we came all the way up, and this is a retracement into a bullish fair value gap. So somewhere around here is where I'm going to be kind of just like looking and managing and doing better. The market opens up in an hour. It's usually when all the banks will flood the market with money, and usually that's when the charts will look a little crazy. There's no news today, so I'm not really expecting a lot of like I'm kind of expecting like smooth sailing and everything's going to be a little bit easier today because we had a Powell, which is someone that, you know, looks over the market as a whole, I think. I don't know his job description. I just know that when that man walks on the stage and opens his mouth, it goes nuts. I don't know like what mouthwash he's using or like what brand of deodorant, but everyone's like staring at this man and just seeing what's up. So I don't know. I don't necessarily know anything about the guy, but I just know when he steps on the stage and opens his mouth and breathes out, the market shits the bed, or the market comes comes down. Like it's drastic. Or and another instance, the market will come down and just fucking explode. So there's nothing's crazy today. But my overall draw on my plan is we have all of these lows. We have that low. Okay. Where's my drawing? Okay, there it is. Bam. This low. This low. And my overall like high time frame draw on liquidity is yesterday's low. This would be my last exit, because if you're going to frame a trade, you need to know where the market could go, and you need to know where you are. Realistically, that's it. But sorry, I just saw something on YouTube popped up about live chat, because this is public. This isn't private or unlisted or whatever YouTube has you do or whatever. But ideally, I'm just trying to max out on the day. But if anyone's going for like the simple RR tools, yeah. Anyone that likes to go for a 1 to 2, that's your target for the day. That low isn't really low. It's just a moment where market came down, manipulated, and took off. So I mean, you could use it. Go for a 2.5. This swing low is actually really nice. That's a 1 to 3.5 RR. But my total move for the day is pretty much a 4.8. So realistically, what is this? All right, I'm gonna draw this out just so I can have like a calculator so that you guys can see this. Your RR is judged off of what you're risking to rewarding. So if my max RR is 300, it's this number multiplied by this number. So the most I could take today is 4.8 RR. So you times that by 4.88. So the max take on the day would be 1,500. Realistically, with going into a new account and Express and everything, I am more focused on taking what I can get for the day, and I'm not trying to be greedy. When I'm on combines, I'm really aggressive when it's on combine. But with the mental shift from starting something that's new and finishing something with combines, because it's like start, finish, start, finish, start, finish. Like it's easy. It's like doing homework. Like what you did. You went to school, figured out what you did. But when you come to Express, it's like taking the test. It's you gotta take everything you've learned and you gotta apply it every day. Now instead of homework every day, now you're a teacher. You know what I'm saying? So like that's the difference. But yeah, I'm just hoping that we kind of get a displacement, get these candles to close below some of these lows with some gaps, so that my ideal entry is way higher than where I can let's say market comes down, right? And starts retracing, which it's going to. The market's going to come down, take some liquidity, take some lows, and it's going to trace into a fair value gap, and it's going to continue its move down. But if I can get the market to come down and close below this within the next hour, I can drag this line and move it down here, just so I can be safe and be risk-free. Because the moment I move this down, it goes green. So let's say the market flips on me and takes me out. I can go in for a small profit depending on where we are in the market. you know. But I don't want to like screw with anything with this because there's times I've been on my phone and and went to go move a line and I'd move instead of trying to move this line, I'll move this one and it'll tag me out. And then like I'll either be in like sometimes I'm in drawdown and I just want to move it to my like my right spot because sometimes I'll misclick on the phone, which is low key aggravating. But yeah, that's ideally. I gotta move this because I kind of want to use this drawing tool as a hey, by the way, market's open. Boom, 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 boom. Market opens up at 9:30. See, now we're displacing lower. I mean, the only thing I don't like about this is we didn't get a body close. We kind of just got like a liquidity sweep, so we could come up. Because ideally, in the 15-minute, we're in this big ass gap of price where price is more than likely going to want to draw to and take out. But just gotta stay patient. This is a day trading is a waiting game. You get rewarded for your decisions, and you get rewarded for patience. You jump the gun, and you're like, oh, and you don't really have a designated plan where you can draw tools and be like, all right, this is where we're gonna go. Then you're more than likely gonna get burned. So you just need to be on the side of probability. Like, what's the probability of us going down? A lot higher after my 15-minute change in the state fair value gap retest and then dumped right again. It dumped again. So it's like ideally I would have liked to have been up here, but with my average, I was down here a little bit, which is it's no big deal. That's not it's not a big deal. It's a small move essentially, but I do kind of want to take partials. Like I want to start implementing partials. Like I don't care if I don't make the full 1,000 across the 3 accounts, but if I can at least make what I was making on my combine accounts, which was 600 a day, which is a little over half of what my max win is, then I'll be fine. Like I'll take that. But all right, so let me see what this looks like. We're in for what? 6 micros. All right, so 43.50. Did I delete my calculator? I did. All right, I'm just gonna do the math on my phone. So every point is technically times 2 on the dollar. So, or it's times 2 on the price range, which I said was like 43.50 or something, times my 6 micros is 261. Then we have to double that, which is just how the math works. So from entry to this is $522. I don't know if I want to take off 2 contracts, 3 contracts, or what, but why isn't this going down? Oh, okay. I don't know. I'm just greedy. I should be happy with making whatever I can today. So I could always average down. So we're gonna sell. So we need to have a buy limit. I'll do a buy limit of 3. Since we're gonna sell with 6 micros, you need to buy it off of you. So because this is what the market's pretty much doing. It's coming down, it's coming up. People that are looking for people that are buying want to get out at a better price, so they'll come up and they'll sell their shit up here. As the market, depreciates or whatever, it'll come down here. Like the more money that's in the market, the higher the market will go. I'm just gonna delete this. I don't know. I kind of want to build my account up first before I start taking partials. So I'm gonna leave it be. I was sending my little sister some screenshots of the trades I was taking and some of the move that I missed out on, but all good. Every time the market makes a low, I like that it, trades into like equilibrium. So knowing that we had the change in the state here, and you wanted to get a no, to get an equal price, you could have drawn, all the way down to, that low, and then market came up in respect of the 50 of it, just for it to go back down. So I guess I could show you some entry shit. Since I'm gonna delete this. All right, I'm just gonna leave this line here. I just want a line to, represent market open, because I'll completely lose my train of thought, or just the day. Just crooked. Not straight up. All right, so let's say you were in this market, right? And you were coming down. It was coming up to retrace. You could have hopped in, which I like to do is hop in on a smaller time frame, which unless it's the minute, then there's not much you can do. Mark came down, came up, came down, tapped into the 50 of this. You could have hopped in on the change in the state on the 15 second, which is still my entry. Funny enough. And then you could have just targeted this low. So if I was just going for base hits, it's still a 1.8 RR, where you're risking a little less than 2 times your risk. Or you could have just targeted, if you really wanted to, the 50% of this range, because let's say I am wrong and we go 50. Oh, it's the same. It's all the same. Never mind, because the 50 is, it's honestly, it's still within, it's above the your initial exit. But I don't like using this because it's kind of choppy and it's kind of hard to read like when the market's going to go lower. So the lowest I'll go is the minute. Get rid of these drawings. I don't need these drawings. I just like to stay on top of what the market's doing. I kind of don't like that we didn't get a good retracement. On the 1 minute, came up, swept it, swept the 5 minute gap, and then dumped. But I guess that's good for us. I just don't like it when the market doesn't do a healthy retracement, where it like comes up, taps into something like an order block or something, like even coming in to tap into this block, which is your breaker block, which it's funny enough because it also lines up with a fair value gap. There's a lot of ways to judge price and judge where it could be going and getting your most ideal entry, but I'm not too sure. Why did I draw this line? Something. I don't know. It's just a waiting game. That's all this. It's realistically what the name of this game. You just come up. I don't like this part because it's setting up for like a super small time frame AMD model. Accumulate, manipulate, distribute. So this is your accumulation range, where price really didn't do anything. Then the market came down. If we get a push above here, I'm gonna be scared for a little bit, but it could just be accumulating, manipulating. into this gap and then going lower. But, you know, what I'm afraid of is it's going to accumulate, manipulate, push up higher, respect some gap that it formed, and then go up. But I need to get out of my head because that's not going to make us any fucking money. Is this London low? No, it's not London low. London low is... Oh, London low's like, yeah, it's all pretty much London low. Sometimes you can use the sessions of the day for liquidity, for the market to come down and take out, because at the end of the day, it doesn't matter. The world is always at war. Like, you know, US will overlap London, or London will overlap Asia, or like, you know, like sometimes the market will come down and, you know, tomorrow, which is Asia or London, will come down and respect or disrespect, you know, USA price action. So it's just, I don't know. Like, I find it funny that, you know, we're always at war with, you know, the fucking price game. We could come back up higher. Because at the end of the day, we're technically like still in a bullish market. It just, the earliest you can get in is this change in the state. And if this market comes down and gets this change in the state, like let's say you take swings as changes, like this high, this low, this high. If you got the change down here where this is your change in the state versus this being your change in the state, sometimes you won't get a retracement to come back up to take your liquidity. Sometimes it'll just come up, come down, come up. And let's say you wanted your initial change in the state, sometimes it'll just rip and it'll skip the retracement part and it'll just come straight down. Because when markets open, it's usually when it's more aggressive. But just trying to keep everything on my keep everything on my toes. So now we have, I kind of want the market to do some sort of a healthy retracement. You know, like I want it to come down, come up, respect this, push lower. Or I guess since it made this low, this could be that high, low, and then have it retrace up, you know, down into this fair value gap, and then trade lower. I know to you guys it just looks like a bunch of candlesticks on a screen, but you know, like it's like, oh, it's down, it's up, it's up, it's down, it's up, it's down, it's up. You know, just there's context to it. As long as you're on the right side, you'll be a-okay. The only thing that worries me is that the market could liquidate me, but I don't think anything bad is gonna happen. Like I don't think the market will come back up into this area, even though we do have a relative equal high here, which is an area of liquidity. I don't think the market will push up that high, just come right back down like that. That would be insane. I doubt it though. Yeah. Currently up this. All these accounts are being copied, so all the accounts are in the same move. I'm gonna take it day for day though, because I don't know if like the $1,000 mark is. I don't think it should be part of my plan. Times 3. I'm gonna write this down because my brain gets all squirrely. I have a notepad for like notes and stuff like that. Like I like to when I'm back testing, I'll leave notes for myself just so that I can, practice something or see, like, look into something or better me as a trader. I need more coffee. All right, so let's say I can. Oh, you know what? I am dumb. All right, here. So let's say I have a 60% win rate. So let's say I win. I really don't have a 60% win rate though. It's like 70. 70% win. So I'll take 7 wins, 3 losses. If my max RR is 1,000 and my minimum win is, I'm just gonna type this out. So 3L equals 900, but my 7 win equals 7,000. That'll leave me with 61, which, for 10 trading days isn't that bad because that's for 2 weeks. And then we're looking at what, 22, 12, 13, 12.3 for the month. Right? That's math. That's how math works. Oh, wait, no, this is not how math works. Wait, because this is for one account. So we'll take the 12.3 and we'll times it by 3 accounts. And that equals what? Times 3. I'm over here. I'm tripping. I'm like, why is it so low? This would be the max I could make on a day, or the max I could make in a month across all 3 accounts, like combined, because this is for one account until it's tripled across all 3. But, I'm going to keep my my win-loss journey going because I think that's important. This is my settings for all my risk, showing that I'm risking 300 for 1,000. These are performance stats. I will, obviously I can't stream every day with my trades. This was earlier when I psyched myself out and I'm like, there's no way it can go lower, But this is where I am for the day. I definitely going to be trying to take a trade every day and, take some time out to do just something, I guess, or just doing. I think I'll do it every time I stream. I'll come back and I'll look at where I'm at, emotionally and psychology and everything. I'll let you know if I'm psyching myself out because I might change my risk to reward depending on how I'm feeling, like how far. Let's say worst case scenario, it's going against me. I'll either de-risk. So instead of risking 300 for 1,000, I'll do what am I saying? I'll do like 200 for 600 until I get myself out of drawdown or something. But okay, this is our healthy this might be our healthy retracement. I just don't like it's accumulated, manipulated, and we might go higher, but from this high to this low, I kind of wanted to see it to come in here, and with this gap, I want it to come in and respect, this breaker block gap move. Realistically, I won't be afraid of a trade until unless we purge this and go higher, So that's only my That's my fear. It's just we do have like a high, just all this kind of stack liquidity where people that are retail are like, oh, like if we take this, we'll go long, but then market comes in, takes this gap and goes lower. It just keeps eating the people that are at the bottom because we keep going higher, lower. But if we take this, it's gonna scare me a little bit, especially if we get a body closure over it or a body closure over this. Like I'm almost doomed to fail. But gotta stick to the plan. There's a lot of times I get psyched out and the market keeps doing whatever it wants to do. But this line's market open. We're getting a mean retracement though, because we are technically in a bullish fair value gap. Bullish is just another word for long, which is another word for up. We're in an up gap. So I don't need this line. Okay, I keep doing this backwards. Yeah, that's like another ideal entry that I would have liked to have gotten into, or at least the 50 of this candle. You could get in on the breaker block, changing the state, or you can get in here, which is a little more aggressive to go for another short, assuming that this is the flow down and that's your high, low, gap, retest. But ideally, this is the range where I would have liked to see market come in and then continue lower. So nothing to be worried about yet. I think I will break even though around that low. Instead of taking partials here. So I'm gonna delete this because this isn't really a low. This isn't a real drawn liquidity. Actually, let me see if there's anything that we could respect. Oh, we could respect this gap, which is the low. But changing the state, high time frame, changing the state. I need to stop psyching myself out. We should go lower. Like we should. But I will keep in mind that below this low is a fair value gap. I like to use the 5-minute as an entry because nothing beats a JetBlue holiday. I'm just kidding. Nothing beats getting on an entry on an intermediate time frame level because it'll be the best the best entry you can get. Where's the low of this candle? I mean, realistically, we tapped into the gap already, but almost got that nailed on. Perfect. Okay. Like if this gap comes and gets filled, we could be worried, but Mark could just come up, take this high as internal liquidity to come down because like we are respecting this range. If we are right, the market could come back up into this premium, take out this sell side area, and then go lower. But time will tell. We're almost there though with I didn't update this. Yeah, so this is ideally perfect world, taking trades, getting 14 wins and 6 losses. That's what I realistically should finish the month with. Which also we're not in October yet. So that was my plan for October. So anything with this could either put me put me positive or put me a little negative, which, I probably won't trade tomorrow because of there's this news on here. So today's Wednesday. There's nothing going on. But there is also a final GDP, which I mean, I might trade this, but I just like that it's all before market open. So realistically, we could find a good area to trade into. But this is where I'm more worried because it's CPI. CPI usually has a ridiculous, you know, impact on the market. We finally tapped into that fair value gap 50. This bullish breaker. Did I draw that right? Yeah. Wait, no. This is your OT for a bullish breaker, which is this dash line. The 50 of this gap, or the 50 of this candle, because technically this is the lower candle of the series of ups. I know it's like second of the first, but you know. And then we're about to get our. Are we gonna get the breaker? Ooh, that's yeah, that's not good. Displacement. Where there it gaps in price where the the close of this candle doesn't match the open of this candle. Pretty much like this. Usually every time you have a candle, it like they call it open high, low close, or low close, open high. Open high, I don't know. So candle opens low, closes high. Next mark, it'll close, it'll open high, low close, open high, low close. So it's just, this is an up candle, this is a down candle. So the opening of this candle should match respectively to this candle. And then this candle is supposed to respect the low of this candle. And then like, you know what I'm saying? Like that's how candles form. Like this is how candles work. No, we never tapped into it. But this is another, internal change in order flow. So we should be going lower. Yeah. It's all balanced price. There's no gaps on the way down. Got the change in the state. This is your new order block. Order blocks and breaker blocks are two different things. They're on like two opposite ends of the chart. Order blocks are the blocks that make candles move. It could be one candle, it could be a series of candles. So like with this change in the state, this is your order block. Delete this. Delete this. This is your order block, a series of blocks. Came up, tapped into it, changing the state. This is where like a lot of things are pretty much working for you. Now you have a fair value gap. Let's say the market got in, changing the state here. You came down and this candle came down, came up, tagged into the 50, and pushes to opposing liquidity. It's just healthy. It's just healthy retracements and pushings of ups and downs. But if we make a new low here and we break this, I'm almost confident that we won't go higher. At that point, I think the market will just open and it'll dump. But for the market to go lower, it needs to go higher. So I'm not. I don't know. Maybe I shouldn't just. I should honestly just keep my my initial thought process because that's usually what burns me. Now we have a bigger gap. Bigger boots. SpongeBob reference. I'm sorry. Yeah, that's your 1 minute change in the state. Fair value gap retest. 50 of it. You could enter on this dash line. In my model, you can enter on this dash line or this change in the state. It's honestly it's whatever, because this change in the state is now your new order block to go lower. Order blocks are only valid if there's displacement. Displacement leaves fair value gaps. or inefficiencies in price where market was like, hold your horses, let's go back up, get something better, and then continue the move. That's all it is. Order block, change, inefficiency, tag with order block, change, fair value gap, retest, go lower. It's just it. We're just trending down. A lot of ups and downs, a lot of open closes, a lot of everything. We're also on the 1 minute time frame. It'll probably not look so crazy if we use a intermediate time frame. So all that noise that you saw, on a intermediate time frame is better. We got in. I'll tag this out. We had a breaker. This is your breaker block. Came down, changed in the state. This is your order block. Fair value gap retest. You could have gotten in here. I just gotten in mad early. That's it. It's the only difference. But the market really hasn't moved in the last like 2 hours. But we are doing pretty good. I will feel a whole lot better with this move. Never mind, we already did. If I have a fair value gap that I'm keeping in mind, if we can get it to close over the 50% of it, which it did, 30 minutes ago, that's pretty much my, like, we did it. But we got that close and we got the fair value gap. We would have gotten in a little bit lower. Your stop would have been here, but who cares? But this kind of would have to come down and close below just for it to make me feel better. I just like it when the market does what I predict. I really pull out a piece of notepaper for like no reason. Stay in the game. Birthday. Of the email. Birthday, credit, birthday. Sorry, I'm a chef on my day off. Photos required of all gallons. You have a bunch of stores that have, crap product. I should have been trading on my live account. I have an account that has, personal funds in it. And I took a win the other day, last week. And I keep telling myself I want to, I should use it, but never do. All right. Market opens up in 15 minutes. This is exciting. Except for the fact that we're not below the low I want to be at. I wonder how the 5 minute looks. Is that? Yeah, that's a gap. We barely got the close over the 50. But then we got to change in the state. But no, the fair value gap move. If I was in a buy model, this is where I would have longed. I probably would have gotten in here, but there's no gaps to respect. I mean, there is. I probably would have entered here if I was on the flip side. You know, stop below that low. Probably targeting that high. But we're in a bearish market, so we're in bearish order flow until proven otherwise. The last 15-minute candle. God, I feel like I just wasted like an hour of my life. we haven't gone anywhere. The only thing that worries me is this. The market is going to want to come up, take this high, and then go lower. Why is this line here? Is that the 50 of this? I feel like that's the 50. No. Ooh, you know what I should do? I don't think I have the drawing tool anymore. That's honestly terrifying. Trying to draw a deviation tool. See where market would come down and trade into and respect. We closed that gap. On the nose. It was a perfect fill. I don't like that though. I don't like that it's a perfect fill. I don't like that it's against me. Yeah. I'm not in this, obviously. This is just a drawing tool. But if we were in a buy model, I would have taken it. No, I lie. I would not have taken it because I would have waited for the 15 minutes to change. I would have waited for the 15 minute to at least come up and close above this. But I don't know, maybe the long would have been short lived, you know, just to take out this liquidity pool with this fair value gap, you know, order block takeout, you know, for a better price. It'd be against me. Yeah. My model is just the market coming against me. That's it. You're just trying to get the best fill. Because, all right, so why do I like it, right? Why do I like the market to go against me? When you go on a change in the state, you are either in drawdown for a large period of time, or it wouldn't necessarily be large. I guess it depends on market conditions. But like, let's say you got in the change in the state, right? And the market pushed down. Oh, I'm in the wrong one. Let's say we got in the change in the state here because this down close candle closes below that down close candle. The thing I hate is, let's say that's your target on liquidity, which, you know, that would have worked out today, which was the move that I should have been in because I think I was in here waiting for the shift, but it never came up and never tagged out or whatever. Is there displacement here? There is displacement. See, I would have gotten filled on the gap. Kind of, barely, not really. So changing the states and why I don't like them. Changing the state, down, 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 down. Market finds some pull liquidity, and then you're up. I necessarily can't move my stop to break even until this market makes a new low. If I take a fair value gap retest, 9 times out of 10, it'll come up, make the low, and then I can immediately move myself to break even. You know, assuming, let's say we gotten in, you know, 20 minutes ago versus, you know, an hour and a half ago, and the market pushed lower, I could have moved my entry to break even there versus changing the state, and then you're in drawdown, then you're waiting for the next change in the state to go lower, but then your second move, you have to wait for the market to come down again, come up, and then trade away. When you hop in the trade when the market's against you, what I'm saying is I have to wait half the time to move myself to break even, because this game is just, it's capital preservation. Like, you don't want the market to take out what you worked hard for, you know? You know, I've been doing this for a little over a year, and I think I finally cracked like what I've been missing and what I should have been looking forward, and I've seen enough videos where the shit should fucking work, you know? So I think I finally got my I think I finally feel like I have my piece of the pie. But see, like, you would have had to wait for the market to come down, come up, come down, come up, when the market made this push lower, if I was in that move, I could have moved it to break even. Like, I would have felt confident. But now we've generated a bunch of buy side liquidity, or a bunch of sell side liquidity for the market to come up, tag out, and push lower, because just how the market works. The market is out to get you all the time, you know. But the market won't go out of its way to lose money either, if that makes sense. Like, the market, I don't care who you watch or what you do, but the market is out to make money, and it's perfect. It's perfect every time. So the market makes no mistakes. The market knows what it's doing. The market knows exactly what it needs to move. The market just knows, you know. So as long as you know that this chart is God, then, you know, your job is to just react with the market and what you know, and time and price. Like, right now, I shouldn't be in a trade knowing that I'm not in a safe spot, because this market hasn't came down and taken that low, or the market hasn't come down and taken the low that I've been wanting this entire fucking time. But if the market comes down and closes below this low, I will move myself to break even, because at that point I don't want to be in the move anymore, even though I'm not that far in the move, essentially, because we really didn't move, you know, because I got in at 8. So the last like hour and 20 minutes, we haven't really gone anywhere, which is kind of scary, because I could be wrong about the day. Because like I was pointing out, we have this low, that overall low. Now we have this high, that high, that high. And what's the market going to do before it moves over? It's probably going to take all of the highs before it goes lower. All the market has to do is shoot up, take it out, and then close back down and push lower. But now, like, all of our all of our prices are lower. You know, instead of me being in at 690, you know, gonna find myself at 875. It's only a 15-point difference, but all the stuff matters at the end of the day. I move myself to full screen. The prices are hard to read. I might have to start, you know, looking at the charts on a white canvas just to make everything better, because the light is not bright enough to light up the dark, per se. Wait, I just realized. Wait, is it hiding the clock? Oh yeah, this clock is what I usually look at. That's like our New Year's Eve type of thing, where it's like 5, 4, looking at the market. Market's gonna open up, take what it needs to go lower, and then it's gonna go lower. Just really want it to make that low. So the market, when it opens up, it tries to grab lower liquidity than to take higher liquidity. You know, because right now we have a technical change in the state here. Even though we are bearish in the market to go and look for lower prices, if the market is here and not below here, it's going to want to shoot up and take me out, I think. 925. Boom, 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 boom. We also could just sweep this internal high and go lower. The market's perfect. You gotta just, you know, put your stops where they make sense. All right, I'm gonna move this line here. Clean up my chart a little bit. I like purple. It's not my favorite color. I just like purple on my chart. This is very interesting. Usually when it's 928, the market kind of like goes a little crazy and then it slows back down. And it just, you know, then the real moves at 930. We're not in a bad position though. You know, we're in profit. Yeah. After this next minute close is usually when it goes a little crazy. I will be right back though. I will be right back. I'm gonna make me some coffee. Oh no. My coffee pot turned off. Don't typically microwave coffee, but it's an emergency. Microwave for like 30 seconds. Check on this. I'm not worried until I have to be. My daughter's bike just grabbed me. Coffee, 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 coffee. Hmm. All right. I'm gonna have to make food at some point. I'm starving. Ooh, market open. Kind of early in the market open. Kind of hoping it respects this, which looks like it is. Get some turtle soup action. It's probably going to come down and take out London. See, this is the move that we've been waiting for the entire time. But all right, see if we can get a 1 minute close to close below. Make me feel better. Ooh, is it just barely? Oh wait, that's the wrong line. Wow, there's a lot of volatility for nothing to be going on today. All right, I'm gonna go ahead and de-risk. The market has already, taken what it has needed to go lower. We're gonna push for this London move. Realistically, like, let's say I do get stopped out here. I do give myself an additional hour to find another gap or something to respect or whatever. But I really feel like this low is one of their biggest draws on liquidity because it's a session low. But stay focused. Focused. Stick to the plan. Stick to the plan. Sorry. It's a little much. But yeah, so ideally I want the market to come down, take this out, take this out, take out all these lows because it's just low, 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 low. A little bit of a high, low, 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 low. We call it LRLR, which is it's stacked. It's just stacked liquidity. So if I can draw a trend line like that, right? Market came up, came down, bounced, bounced, bounced. This is probably the easiest draw on liquidity you'll ever see. Anyone that's retail, which is like normal fucking people, they'll see this and be like, "Oh, this is support." The market will see it as that's money because they know there's people with stop losses here, stops here, stops here, stops here, stops here. They took a little bit of a stop. They came up, got a better price overall on the high time frame. They pushed for the 50, and then we initially got our shift. We got the lower move. This is honestly it's literally going to eat all of this. I mean, ideally, my high time frame draw is this low. Like I'm assuming the low is gonna come down. It's gonna get taken and come down here. But yeah, like I honestly feel like did we tap into the 50 of this body? Eh, almost. A 50 of previous day's body respect would have been, you know, like the icing, like, you know, the cherry on top, but you don't always need that. It's so crazy though that the previous 4 hour was a bullish candle, and literally the 4 hours after it's just down close. But you know, just gotta look at everything as a whole. I know a guy in my group that would have saw this and said, "We're gonna long." So I don't know, man. This change in the state with the overall down push is ideally. This is the gap that I was like, I don't know, man. We got 25 minutes to close below it. We got a lot of time. Trap this low, trap this liquidity. I'm at break even. Like, I'm not worried. Very interesting though that, like, let's say I am wrong and we reverse and we go higher. This would have been like a real nice area to take a long entry, because it is a fair value gap stacked with a swing low and some other liquidity along with this 15-minute fair value gap. Well, the stack of 15-minute fair value gaps tapping into the 50, like this would be like a sick long entry. They call this soup. I think this is turtle soup, where, you know, you literally hop in when everyone's getting stopped. You know, so like let's say you had this fair value gap and everyone's getting stopped. This is your ideal entry. Assuming that we are in a buy model, like we're in for buys. Your low would be at the swing low, and then you would target, you know, the yesterday's high or whatever. And you'd have been in drawdown for like a second. But gotta stick to the plan. I'm assuming lower prices today. So I'm gonna keep practicing that. You know, we tapped into, you know, order block, displacement. We need this 5 minute to close. We got 2 minutes for it to close. I prefer this candle to close below this candle. You know, because this is an inside bar, or at least for this candle to sweep the low of this candle is primarily what I would like for the most part. But most importantly, I would like for it just to keep shitting and just take my profits so I can get off the charts, because, you know, this is the overall reason why we trade. We want to have an idea. We want to find our entry. We want to find our trading plan, and then we just want to execute. That's it. That's all we care about. Like, that's it. But but I honestly feel like I just wasted like an hour and 45 minutes of my life just for the market and to fucking just to open and then take profits in 15 minutes. Like, that's fucking insane. Like, I feel like I wasted my time, but it's not a waste. You know, every day gives you an opportunity. Every day you can make money. Every day you can draw up a plan, literally draw. So I'm happy about this. A part of me wants me to leave an open-ended, you know, take profit so I can take more than the 1,000, but I think giving myself a start, finish, max loss, max win, max, you know, just max, and I think I'll do better because I'll have a plan every day. I need to give myself some structure and this, that, and the third. So as far as I know, I'm not gonna leave this open-ended ever. I need this to give me some structure. All right. This 5 minute closes in 37 seconds. Assuming it doesn't push up any higher. This is going to be our gap. And of course, as I say, this isn't going to do it. It does it. First presented fair value gap. We realistically could trade all the way back up into this. Try a different candle. Yeah, we could trade up into that. Like, let's say you were waiting for the push down and you wanted a retracement up. You could enter for this low, high above the manipulation, targeting your opposing liquidity, which this was my overall, take profit on the day. Still a 2.7 RR, That's still like, that's probably still the same, literally the same move. It's just shifted down. The wait. It's a waiting game. This is where a lot of traders are like, market's reversing. I need to get out. I'm freaking out. I'm this, I'm that. There's a lot going on. This is this is what you signed up for. I'm not gonna lie. This is you. This is what you wanted. This is what you got, right? We could take this high, respect the gap, go lower. This is a breaker block. The series of up close candles before the push down because we are bearish. It kind of lines up with this fair value gap though. Time will tell. Took a screenshot. Send this to the group. Oh, it's another trade I took. You can't see anything on this screen, but everyone's gonna be like, "You top ticked it. You top ticked it." I say this. I always get these like attaboys, and I never believe it. Like I never believe that everything that I'm Oh, did I delete this? Share. Oh wait, no, I don't want to share this. I want to share a screen. There you go. I want you guys to like not look at something. Why did that close? Oh, I see. Stop sharing means, stop letting you see what the fuck. I just never believe the attaboys, like, good job, I'm proud of you, like this, that, and the third. Like, I just feel like this has always been my like I've been pushing and grinding for so long and I've kept my head down and I never let up. I never stopped to appreciate. Oh, that drop was fucking serious. What the hell? I never. Oh, we're hopping into the macro time. It's the last, I think 10 to 15 minutes in the hour, and then the beginning of the first 10 or 15 minutes. So we could get a real nice push here. I've just been grinding for so long, and I don't think I've ever taken the time to like appreciate myself. Like I've never taken the time to look at myself and go, great fucking job, and feel it like in my heart, and I think I'm gonna be getting into that time where it's like, 90% of the time what it's gonna do. You know about 70% of the time where you need to be, and you will more than likely beat the 98% of people that don't make it. Like, I've seen so many videos where they're saying, if you can stick to this for a year, you have like stupendous odds against anyone that's in this game. You literally look at probability in the face and just knock it down every time. You know, like the probability of this working out, and I'm like, no, I don't think it's gonna work, and it doesn't work. Or I'll see something going, and it's like, it's kind of against what I feel, and I act on it. It's it's such a good feeling to see that. Sorry, I'm like spaced out. I'm kind of exhausted and hungry and trying to get caffeinated. Made a coffee, not drinking it. Mm, totally lost my train of thought. I need to be more full of myself. I need to do better. I need to give myself that like personal satisfaction, because I'm not gonna feel it from other people if I don't feel it when I say it. When my brain and heart are on the same line and they're both doing and saying and giving you the fucking high five you deserve, like, all this shit paid off, all the money you threw at the fucking markets, it's time to get all of it back. Like, God, I'm so ready. I'm so ready to just get my fucking freedom back. And I do whatever the fuck you want when you feel like it. You want to stay in bed and not make money today? Do it. You want to go on a 3-week vacation and chill out and not make money for a month because you can afford it, because you have enough money put aside for the next like 5 years, and you want to take 30 days off? Fuck it. Go see your family that you never fucking see. Go see people that you've never seen, or go to places you've never been. Like, this will take you there. If you know what you're doing, you believe in your plan, and just trust it. Just absolutely trust it, you know? I'm gonna be honest with you, I've lost way more than I've won. Probably this entire time I've been trading with this prop firm, I've probably thrown a good 5, 6, $7,000 into the hole. Like, over a span of like a year and a half, pushing 2 years, I think I started this when my daughter was born, and I'm like, "Bro, I gotta make it out. I can't be living off a fucking salary." I can't keep working for someone or being with someone or working for someone, and I'm not really getting anywhere. I'm break even in life. I'm the second highest paid manager in a building, and I'm still living check to check. Like, that's bullshit. So, is this it? Are we done? Is it over? Like, come on, take prior day low. Take prior day low. Like, this is London. This is London low. This is... God. Finish it. Finish it all. Take me out. All in a day's work. Attaboy. God, I wish I had my buttons. Yep. So up here, I'm up 988. Yo, buddy old pal. Where my $12? Like, what the fuck? Like, I gave myself extra room. Give me the clean 1,000. Man, fuck you. What? I don't care, man. I made $1,000 in an hour. How long's your stream? Hour and a half. There is nowhere in the fucking world, unless you're the fucking president, the fucking CIA, or a fucking NFL player, sports member, where you will make that much money. Let me clarify this. There's no place in the world where you can make $1,000 in an hour and a half sitting on your ass. Nowhere. Did we take priority low? Oh, we're about to. This was my overall trade today. This was my area of liquidity. If I was to have an open-ended dollar sign, that's where it would have went. That second low, that would have been my full take profit. This would have been my first partial. London low would have been my second partial, and then my last trade would have been this daily low. You know, we're one day into wins. Performance stats. Yep, this is my... I hate that it's so small. Can I blow this up? Oh my god, I can't. Where has this been my whole life? All right, because this is easier to read. No, so I freaked out. I got out. This was my initial jump. This was my average against me. And then that's that. That's crazy. Where have you been my whole life? Yep, this is... Here you go. This is 50K, 150K, 150K. Realistically, I could take this off and keep trading, but this was the trade of the day. This is the idea of the day. This is where I stop for the day. I don't care what the market does. I don't care if it drops another fucking 400 fucking points, which I don't even think the market really moved. Oh my god, it's so zoomed in. No. Oh shit, wrong direction. Can I? You know, 110's not bad. Why don't I keep this on 110? And then when you zoom in, is it? Oh my god, it's so much. I'm going blind, guys. I've had so much screen time in the past year and a half. I need to... Oh, I never took the low. Take the low. Make me feel better about myself. So what? Where was my initial entry? Here? Here, right? I want to say up here. Here. There. Underwear. Yeah, because I was reading like 270 for 1,000. Yeah, I was somewhere here. And then market opened. What a day. No one was watching the stream, by the way, but I'm really hoping that the people that, you know, have my YouTube account and they see all this stuff, or I'm hoping my little sister comes and looks at this shit and learns something, because there's nothing wrong with a little extra money, damn it. Pendeja. Yeah, yeah, I understand. I love it when it like you win and it's like temporarily deactivated because you made money. I'm surprised we're not taking this low. I'm assuming because we made this gap, we're probably gonna take this gap. Anyone that was short or weren't sure about their entry, they could get in here. You know, tap into the 50. You know, order block retest, change in the state retest. You know, to go for this low. Honestly, like, let's say you did take this and you had your stop maybe at this high and go for this low. It's still a little over 1.5 RR. You know, you're risking 300 for 450. My same risk to reward, like $450. That's 2 of my days working. And to what, wait 20, 30 minutes for this to play out? I don't know. I'm glad that we anticipated the, you know, market has to go higher before it goes lower. Because, you know, market opened up, took out this high, took out this high. You know, the market. Let me clear this. Okay, never mind. See, the market needs to take liquidity. There are people that are in shorts. Honestly, I'm surprised it didn't take out this high, but I'm assuming maybe because it was paired with an order block that it didn't want to, maybe. Market does whatever it wants. It doesn't have to follow anything that I have to say, but we came in, tapped out, liquidity, fair value gap, order block, and then it dumps. A lot of people could have gotten in on the turtle soup of this, had their stop there, and then a lot of people would have targeted this. Like, that's a much better RR. You know, that's pushing 17, 1800, 2000 on my move, you know, because assuming that my full stop was $300 up here, which I honestly would have probably gotten out around here. The market I probably would have been on the charts for, you know, like 20 less minutes or some shit, because the market would have came in and then 4 minutes later it would have tagged me out. But that's optimal. That's best. That's having a plan, executing an order, and then following through. Because then you probably would have had an average price about here, assuming that it would take that low, take that high, and it's gonna. If you have 2 separate highs and you're taking a short, it'll meet your order in the middle, depending on how much you're risking. Like, if you're risking a lot more, it'll drag it a little lower than the half. But if you are keeping equal lot sizes, it'll average it perfectly and you'll get there. But depending on your stop loss, you know, assuming that it was going to take this low and this block was the high, you could have put it here and then you would have had an 8 RR, which that's pushing 23, 2400 if they had my same risk to reward. But I'm not mad about the day. See, that's almost 3,000 if you had taken the whole low. But yeah, man. It was a good day. I don't want nothing else. I don't want nothing else to do with today. I am going to delete this. I'm going to show you what the high time frame looks like. Absolutely shit the bed. I'm assuming we're gonna I don't know, man. I am a firm believer between highs and lows. We honestly could come here and drop 600 points within, you know, the next 2 days, or pushing into next week, assuming that on the weekly candle, like, we will be going lower. Like, there's a fair value gap here, depending on how. Oh, today's Wednesday. You know, we still have 2 more days of price action. Like, we could come lower. We could tap into the 50 of this, you know, this daily fair value gap and push higher. But if the daily comes down and closes between today, tomorrow, or whatever, then we honestly could be seeing some real deal fucking retracements, even on like the weekly. I just don't think the weekly will come down and re-sweep a manipulation candle, because this candle was the candle that swept all of your internal liquidity before it pushed up higher. Because these last like 3 weeks we've just been bullish, so it's probably time for the market to come back down. Draw this real quick. Yeah, I mean, let's say like we stay in the same range next week, we'll probably retrace into this gap or something and then go lower. But yeah, I'm gonna close out. Thanks for watching. I greatly appreciate, anyone that wants to learn, or if anyone has questions. A lot of people that are subscribers to this channel are people that know me personally, so they'll probably just text me. But if you have any questions about whatever, you could always take a screenshot, or send me something that's like, hey, by the way, I don't understand this to its fullest extent. Could you like dive deeper into it, and I can help you with whatever. Because I mean, if it's working for me, it'll work for anybody. But I think before I close this, the last thing I want to talk about is a lot of people trade different ways. I feel like I trade real logically, and I trade with kind of a laid back approach. I'm not really aggressive. I don't like I'm not a kind of person that wants to get in, get out. I am okay with taking one move that makes sense over no move all day. Like, if we missed any of the price action, I would have been okay with it, knowing that we weren't gonna get a move in today. Obviously, every day I'd like to frame a trade. I would like to see where we could go. I would like to, have the higher time frame show me where it wants to go, but yeah, you just honestly need to figure out what kind of person you are, like personally, and you need to kind of implement that into your learning style, like how you want to learn, what setups you want to take. You know, you can be a person that wants little to no drawdown all the time. There's a lot of ways to trade to make that make sense. Like the way I like to trade, I don't like being in drawdown. I don't like seeing red. I don't like seeing, you're down $150. And then I start thinking about, well, your max is $300. Like, do you really want to be risking this? You want to risk half of it now. Market's not even open. Like, it's just like this wheel that just runs and runs and runs and runs. And it's just like going totally against everything, like everything that like your brain is your biggest friend, and it's like your worst enemy. Trading, you're your own boss. Every decision you make will cost you money. But anything in life will cost you money. You gotta think about all the money that people live in a regular life. You know, like you have Wi-Fi every day. You're paying out money. You have a car every day. You drive the car. That car costs money per day. Your insurance per day. Your gas per day. Your time of life per day. Your cell phone per day. Your light per day. Like every day is going to cost you money. So every day, realistically, you're already your own boss, but now you have to implement this in the charts. I feel like I did a real shit description of that. But I guess what I'm trying to say is don't be afraid of this. Take the good, understand the bad, and put yourself on the side of higher time frame and then move lower. Like I started the stream and I started with the daily, then I went to the 4-hour, the hour, the 15-minute. See where you are. See if things are making sense. See if your overall is, like, is is everything aligned? Because everything is fractal, everything makes sense. If the 4-hour is looking for shorts and the 1-hour is looking for shorts, your 5-minute is looking for shorts, but your in-between time frame is looking for longs. You cannot trade until everything has shifted in your general direction. And then when market opens, you kind of want to see liquidity get taken so that it pumps the market down. Like, you notice when the market opened, it went straight up and straight down. It spent no time taking its money. It spent no time trying to get anyone that was early. It spent no time. It was in, it was out, and it pushed lower. It knew the market knows exactly what it wants to do every time. Every time the market knows what it wants to do. You just need to be on the side of, is this what it wants? Does it make sense? Is everything aligned? If you can get that far and you're like 90% sure, I'm almost 100% positive it'll land. As long as you know and you correlate and you make everything make sense. Like back in the day of me trading, I would have noticed that today, like I told you, we were getting this up close candle. All of this, you don't want to look for any goddamn shorts until you got this move at 7:30 in the morning, which is honestly when I was on. And ever since then, it came up and it just respected. Let me show you something interesting. Right? It's not going to make sense on here. Whatever. Market came up, took liquidity, and into this fair value gap. First fair value gap since 7:30. Came up, respected. Posing draw. Stop loss at the first candle. Usually that's how fair value gaps work. If you're going to use a fair value gap, the first candle is where you set your stop loss. Don't ask me why. It just does. Market opened from this, tagged you in. You were in drawdown for what, like 10 seconds, 15 seconds? You saw the 1 minute open up, tag out all this liquidity and dump. So from the moment you could have entered, oh, I didn't even talk about how far the move was. Totally forgot. I was like, damn, I wonder how far it moved. We went from, I can't remember where we were though. I honestly feel like we were about this high, or we were about here. Here? I don't know. Let's say we got in at 888 and we got down to, I guess, the brass tacks of things. 888. We dropped like 80 points. That is fucking solid. I don't care who you are. That's some good shit. 88 points across whatever. Like, we can go for even the lowest of points. Still $180 for a take profit. That's still not a bad day. You can land that 3 times, 600 a week, 2,400 a month. Like, that's paying someone's mortgage on the low end. That's a bill you don't need to fucking pay because this will pay for it as long as you're right. I'm right like 80% of the time. 75, 80%. I will take 8 wins and then 2 losses, or 7 wins or 3 losses. But what I would like to show you though, with this game, as long as you don't shoot for a 1-to-1 and you can shoot for a 1-to-2 or a 1-to-3, or in some cases, when I was showing this earlier today, like a 1-to-8, you could take 1 win and lose 8 straight times, and that one win will pay for all your losses as long as your losses are the same. You can have a 20% hit rate, a 30% hit rate, which you lose 7 out of 3 times, and you will still make money. Let me show you. All right, so let's say this is gonna be. I guess this is gonna be kind of hard to understand. So let's say you have a 30% hit rate, right? So you get 3 wins, 7 L's. If you have a 1 to 4, yeah, let's say you have like a 1 to 4, risk to reward. So every loss is 4 wins, or every win is 4 losses. So let's say you get 3 wins for 4. 3 times 4 is what? 12, right? It's 12 losses. If you have 7 losses, because it's a 1 RR, or it's for every loss it's 1, that equals 7. 12 being bigger than 7 leaves you with 5. 5 W's. W, L. 5 wins for loss. If you are like me and you're risking $300, 300 times 5 equals 1,500. Times 2 equals 3K. You can lose so many more times in a row, or just you could take 14 losses and 6 wins, and if you have a 1 to 4, which every time you win, you're risking 300 for 1,200, you will make it out in the end. 30% is shit. You go take a test and get a 30%, you get your ass beat. Like, what? Here? In this game? Stick to your roles, stick to your plan, everything makes sense, you make bread. Or at least me. If I got this, dude, I wouldn't even be here. I'd be dead. I would have gotten murdered. But yeah, like, you don't even have to be great at this. It's a numbers game. But stop ranting. I'm gonna stop praising why I like this shit so much. Except for the fact that we came in, tagged, stop loss above here. Sorry, this is the move I was talking about earlier. Stop loss above here. Let's say you entered, there. Stop loss there. Still 2.7. You still be in the trade because your stop loss is this high. I'm not gonna sit here and watch it play out though. I'm gonna catch you guys later. If I have time tomorrow, I'll hop on the charts and either frame a trade or something, but I'll show you guys my my performance stats going into probably my next day off. I don't know when the next day off is going to be, but yeah, if everything goes well, I'll either be up by the end of the week. I'll either be up 3K for the most, or I'll be up 600 the most across 3 accounts. It's still up 1,800 across 3 accounts, or I'll be up 9,000. It doesn't. Perfect world, God willing. I'm probably not going to trade tomorrow though, because there is news. But the fact that that particular news is earlier in the day, I might trade it after, depending on what's going on, or if my areas of liquidity have been taken before New York open around 9:45ish or whatever, I will I'll probably miss it. So I guess the max I can make is 2K, or I can make 700 across 3 accounts, still 21. Can't complain. Catch you guys later. Peace.